Good morning, everyone. We are about to present Digby Sensors Company debrief. The agenda is as follows. We will first talk about our mission statement. We will then present the 4-year projection, the breakdown of market segments, and talk about numbers. Lastly, we'll talk about what the future looks like for us and the changes we plan on carrying over to the next 4 years. We will also talk about the team, the group process, and key elements that helped us be successful during these 8 years of managing Digby Sensors. So Digby's mission statement is to provide high quality and environmentally conscious sensors in both the low and high tech segments, to empower our customers to make the best product possible at little or no unnecessary harm, to inspire the end user to show love and regard to planet Earth through more environmentally friendly purchasing decisions. So our mission statement is pretty simple. We want to offer the best product at the best price, all while being respectful and preserving the environment. We want to help both our customers and end users make environmentally responsible purchasing choices. We realized early on that we could drive change by providing environmentally friendly products to our markets and being the alternative solution that would satisfy their needs and help tackle the environmental crisis. So now we're going to move on to the projection for the next 4 years. So how well will we do? We had some experimental phases which caused us to reevaluate and make some changes, but through those, we were able to iron out our method and our process. We were new to the industry and we were trying to figure out what we could be the best at. Once we figured we were more than competent at manufacturing high-tech sensors and why our product was gaining more market share every year, we adjusted our strategy and decided to play to our strengths. Afterward, we only saw positive changes. By our success and our projection, we will only continue to improve in each area of the business.
Here at Digby, we decided to emphasize the high-tech industry, though this doesn't mean we wanted to neglect the opportunities present in the low-tech industry. We built a strong low-tech product right out the gates. We made days self-sustainable so that we could put more time and focus into the high-tech products. Of course, every few years, we would update days to keep it actualized, but it did not require a lot of our time. With this extra time, we used it to focus on the high-tech market, which is always moving forward. After we stabilized days, we introduced DCAM, our champion product. Our focus was to keep DCAM at the forefront of the industry and increase our ability to produce what the consumer desired. After so much success in the high-tech industry, we took advantage of it and introduced our second high-tech product, Dream. Here, we will look at our competitors in both the low and the high-tech market. Our biggest competitors in the low-tech were Andrews and Chester. Since our focus was never to dominate the low-tech industry, we are satisfied with Days. Days still holds about 14% of the market between over 10 products. Our biggest competitors in the high-tech industry were Andrews and Ferris. For a long time, Ferris dominated the high-tech. However, at Digby, we have seen steady growth. In the last year, we were able to close the gap, and next year, we are sure to have the majority of the high-tech market. Andrews is a fan favorite, but so is Digby. We don't worry too much about our competitors. We are confident that we offer the best products and that the consumers can see that as well. For the Year 9 forecast, we have included a visual aid so that you can see the progress that Digby has made through the years. We predict that Dream will help take our growth to a new level. Right now, we stand at 27% of the total market, and our predicted market share for next year will be closing at 30%. Our final stock price is predicted to close at $140.5 million. It is pretty apparent that in year 4, we had some major issues that took a toll on our numbers, but I will explain this more in depth later. However, after year 4, we can see a steady growth pattern. We focus on sustainable progress and took the care not to over-advertise and over-predict for more than what we could produce. Our predictions for the ROS and ROA and ROE for year 9 are 29%, 31%, and 35% respectively. We expect the same growth for our sales as well. Next year, we expect to close with sales at $216.1 million. Here's a quote by Patrick Lencioni, and it means a lot to our team. It is something that helps us remember what is important, and that with enough discipline and persistence, we can become the most successful that we can be. Over the years, we have had a few critical events that helped us learn and see the success that we have today. In our second year, we released DCAM. This helped us create a big name in the industry. In our fourth year, we had overpredicted and overproduced days, which left us with almost 1 million products in storage. While this was not ideal for the company, we learned how to better forecast and have more confidence in our decisions. After more hard work and dedication to bring our numbers back up, and with the help of a second high-tech product, Digby came back on top last year. For the future, we only see progress forward and upward. With the help of entering a new industry, we know that we will see success. For the future changes in the next 4 years, we are planning on entering into the automotive industry with our sensors. We have a robust product portfolio that has created points of differentiation when compared to the competition product offering. We are known for having high-quality products that are also affordable while being committed to the environment. That has allowed us to build relationships, contacts, references, and equally important, the reputation to confidently enter a new industry. In regard to the market segments, we will be focusing on increasing our market share in the consumer electronic industry, particularly the high-tech segment, as we have seen substantial growth year after year. We will also focus on keeping our market share in the low-tech segment and launch one new product to diversify our product catalog in that specific market. In addition, we will launch 2 new products in the high-tech segment to compete with the existing products on the market. For the auto industry, we are targeting electric car and truck manufacturers, as these segments have seen growth in the past couple of years, as well as SUV manufacturers, as SUVs continue to be one of the most sold car sizes.
As we're going to focus on the future change, plant production will need capacity refer to the volume or number of units that can be manufactured during a given period. If you increase production capacity, allow to eliminate a shift or overtime hours, will reduce wage and a potentially lower workers' compensation premium and claim. Not only will decrease direct labor costs, but will also potentially lower management expense as well. Also, automation increase efficiency on the factory floor. This is because robot and machinery dedicated to specific tasks can increase production rate and labor output. They can do more per hour and are skilled of handling heavy loaded with easy. Finance. Total quality management as a combination of initiatives that are attempt to increase sales and reduce loss for our company when invested in properly. The intention is to provide a competitive advantage in the market for the company. At a positive investment point, there are diminishing margin return in stock and long term. Debt company choose to take a long-term debt to raise capital because it allowed them to keep ownership in the company, which issue stock the number of times that can be done is limited because eventually there will be no more ownership in a company to offer the investor. There are five of the primary reasons why divided matter for investor includes the factor they substantially increase stock investing profit, provide an extra metric for fundamental analysis, reduce over portfolio risk. Listening by practice, the basic principle of the communication was in our group. Constructive conflicts, division of the responsibility, collaboration, compromise, teamwork. Everything was on time with everybody together. As a conclusion, we are delivering for our customer. Our customer keep coming back. Our business is good. We are getting our work done on time, time management. We are leader for to keep this business for the future and forever. Thank you.